All right, welcome back. It's Code to Capital. I'm Kenny. We're doing another chart review here. It's January 9th, Thursday right now, 9 p.m. We are on these charts. I think we might get some good volume going into the weekend after the day off. Yeah, it's like a made-up holiday we had this week, so the markets were closed. So good though. There will be some money in the markets tomorrow. So look here at the SPY. So the SPY, we ran up to all-time highs here, of course. Back in December, we got to about 608, almost 609. And actually, we hit 609.07. And then we had a big down day here on December 18th. Dropped down to 581, bounced back strong, up to about 601 here. I'd say maybe even 601.50. And came back down here, kept this 581 level. So we've been pretty choppy here. Up, down, up, down, up, and now we're back down. Seems like it wants to hold this 585 level, but we'll see. This is not exactly the hammer that I like to see here. I might even think SPY might bounce back down to open to, but if it does hold this 585 level, then we'll be looking for calls. And if, of course, it continues to run from where it went on Wednesday, then we'll also be looking for calls as well. So this looks good for the market. We might be able to get back up to 595 here. This looks like some type of wedge forming, but we are in a choppy market. So we're going to be taking closer expiration date options, and we're going to be holding them for much less time. So I can even get into an option and get out in the same day in this type of climate. It's very choppy. You want to take your profits when you get them and then pretty much react to what the market does the next day. I'm not sure if I'm going to hold anything into the weekend yet, but we'll see. We'll see what the market looks like. So yeah, so let's take a look at US 30 here. US 30 is live right now. We have some levels here. This is like a level of support right here. Also right here, resistance. So again, US 30 is ranging between this 42,150 level and this 43,260 level. This is the Dow Jones. So these are those top 30 representation companies of America. SPY is the top 500. So yeah, US 30 is live right now though. SPY isn't. So that's why we're taking a look at this to see what it's doing for Friday. As you can see, it's January 9th right now, but the Friday, January 10th candle has started because overseas market is on and going right now. So now I'm going to go ahead and take a look at some plays I like for tomorrow. I already took a look at my large list, and so for the sake of time, we're just going to go through this filtered list I have here. So first we have Home Depot. So everybody knows Home Depot, major good supplier, home, repair stuff, all of that good stuff. Everybody knows Home Depot. So here, as far as on a technical level, so of course Home Depot is a great company, to invest in long term. They also pay dividends. So we love Home Depot, but as far as us making that extra income through our option trades, we want to know the right time to get into Home Depot, right? And so Home Depot's kind of a slow mover, but it does have some big moves every now and again, and those option contracts can move nicely. And so here we have a strong level of support on 382. And so here you see it bounced off this 382 level November 6th, and it came back to bounce close to this 382 level. And with the strong green bar here, December 20th, we started ranging a little bit, and now we're bouncing back off this 382 level with the strong hammerhead right here. So this is a bullish candle. And so, again, I always like to have at least two or three things that tell me to get into a trade. We are on the daily chart right now. This is the daily chart. Each candlestick represents one day. And so this is a pretty strong chart with this strong bullish candle right here. And we're bouncing off this strong level of support. I do think that we'll probably have another move up come tomorrow on Friday. So I'll be looking to get into a play of Home Depot if we get past Wednesday's highs. And also, if it does get back to bounce off of the 382 level and hold strongly, I'll probably get into like these smaller time frames here and determine if I like the way that this is setting up. Like, see if we can come back down here to around this level, 384, and hold. I'll probably look to get an entry. But whenever I do get in, I'll be posting it in the Patreon. And so don't worry about that. But if you do want to learn about trading and how to maybe get into your own trades or why exactly I'm getting in so that you have like, stronger conviction and you feel more comfortable investing your capital into the trade, this is why I'm explaining this for you here. All right, so that's Home Depot. Next, we have Lowe's. So Lowe's is basically a competitor of Home Depot. They are competitors. They're both strong companies. They go back and forth as far as who's the better one to invest in. I like both. Both are strong in revenue, strong in earnings, strong in sales. They have a lot of capital. They pay dividends. Great companies. And they also move very similar. So you'll see here, Lowe's has a similar setup where it had a strong dip down starting around December 10th, came down to this 200 moving average here. So the 200 moving average is another strong area of support if the company respects it. So you can see here, if we go back, you'll see every time we get around this 200 moving average, we always pop back up. Here we pop back up. When we have a strong bullish candle here, we're definitely popping back up, and then it never looked back after that. So now we're back at this 200 level. Bounced off it once, again, and now one more time here with the nice hammerhead candle. So I actually like Home Depot setup a little bit better just because that's when we talking about levels of support. I like price better than moving averages because that's just more reliable a lot of the times through history. The moving average relies on price, so it's a moving indicator. So like say if Lowe's drops down here to 237, this moving average is going to move. Whereas if we look at Home Depot, this 382 level isn't moving. This is a price level that I've been had here ever since it bounced off of it down here. And now it's back here again, bouncing again, showing strong buying zone here. So, yep, I like it at least back to 396 very quickly. Might be looking to get into a 2 week out option contract. I need to look at the open interest and volume, but Home Depot looks good. I like it a little better than Lowe's, but Lowe's also looks pretty decent here. Next is Intuit. So now Intuit is the company that owns TurboTax. They make a lot of money too. They have good revenue, great earnings. It's tax season coming up now. And so, not that that necessarily will affect the stock so much per se, but that's a good sign. And I have here, again, when we get to our technical indicators, this is heavy on the charts. So, all of these companies are good companies. We don't really have to get into the fundamentals of things. I've already done that. Right now, we're mostly talking about chart analysis to know when exactly we want to invest in it. So, you see here, we have a strong trend. Respects it down here. This was back in May 2024. Bounced off of it again here, October 2024. Again here, November 2024. Strong green candles when it hits this level. This is a strong buying zone right here. See it here. If we zoom in here, we can see this is a strong buying zone. So let me zoom back out. So now here we actually dipped below this level for a second, but then the next day jumped right back past it above where it closed. So this looks good. This isn't necessarily my favorite play. I do like Home Depot a little better than this one, but I'm gonna have my eye out on this to see if maybe we get a better candle tomorrow to set us up for the weekend, maybe. So we'll see how that goes. We also have earnings coming up, and I think they'll do good. Next, we have MasterCard. So MasterCard, the credit card company, everybody knows MasterCard, right? So MasterCard again, we're going off of price action here. Support levels here. We had a nice dip down from all-time highs of about 537.70. And the last time we came back down to this 511 level, you see, was November 20th. And now we're back at this 511 level. Sellers came and brought it all the way back down here. They could not get it past this 511 level. And then buyers came in and took over. And it looks like we're back to the upside here. So I can see MasterCard getting back up to 526 just as fast as it came down. So we'll take a look at MasterCard calls as well. All of these trades that I've charts that I've just gone over, we would be looking at calls because we would be looking at it to go to the upside. Next, we have Adobe. So Adobe's been getting hit, and Adobe's been getting hit. If we go to the monthly, it ran up here in January 2024, came back down. We had a nice strong bounce back, and then once it hit this level of 585, it couldn't go any higher. Bounced down back again here, and now we're all the way back down to 419. So from all-time highs of 699, almost 700, to now down to 419. So for a company like Adobe, that really is a strong company. You know, they own PDF manufacturer, Adobe Acrobat. And so they have a bunch of other tools that are used and integrates with Microsoft. Big company, they make a lot of money. And so they're having some troubles here with their stock, obviously. And we obviously we see a downgrade here over uncertainty over Firefly. Not sure about that. But I know that Adobe's a good company. And this is about 40% off, definitely almost 50% off. And so, yeah, I like Adobe here. Paul's bouncing off of this level of 416.50 because you can see this was definitely a level back in 2022. And yeah, we'll see. It might even come all the way back down to 385. We do have There is definitely room for it to come down some more if, the stock market wants to react that way. But I do think, and of course, we don't want to catch a falling knife. So, like right now, this looks like a falling knife here on the monthly. On the weekly, it kind of looks like a falling knife as well. On the daily, you can see we get certain pops here. And so, again, I wouldn't be taking this trade per se tomorrow, but it is a good stock to look at, and I will be keeping my eye out on it. Next, we have Palo Alto Networks, PAN-W. So this is a cybersecurity company, great company as well. They make a lot of money. They got a lot of deals going on. They're not as, they don't have as much revenue and as much business as CrowdStrike, but PAN-W is a great company. And they've been getting hit recently, probably the past, I'd say 3 weeks or so. They've been coming down here, and we see that they've gone all the way down to the 200 moving average again. So again, we like that 200 moving average as a strong level of support. As you can see, every time it gets around this 200 level, we have a strong move to the upside the following days. Even here, we had a strong gap down. This thing gapped down 28% and then stops right at the 200 moving average. And then for the next following days goes up 2%, 5.3%, 7.3%, 3.9%, almost 4%. So that's 4, 11, 16. Basically, you get back 20% right after you bounce off of this 200 moving average. Right? So, of course, when they drop 28%, everybody's running, everybody's selling. Nobody's looking to get in the calls here. Are you crazy? They just dropped 28%. But if you got in the calls here, you made a lot of money that next week. So always be wary of that. They've been getting hit. Looks like fearful now. So when they get fearful, we get greedy. I do like this setup here on Palo. This isn't necessarily any candlestick formation, but this is more so going off of this bullish daily candle here. This is again another hammerhead candle, and it bouncing off of the 200 moving average very nicely. I think we could get back to 178 here pretty quickly. So that's something to look out for too. It's another scalp. And so those are calls as well. So everything I just went over is for call options. If I do get into one of these plays, I'll be calling out the exact call option that I get into. And next, now for the last two, these are going to be puts, all right? So I'm going to be looking at these to the downside. So here we have Johnson and Johnson. So everybody knows Johnson and Johnson. They sell a bunch of stuff from baby oil to baby powder to lotion, soap, everything. Right, everything in the bathroom they got. So as far as Johnson and Johnson here, they've really been getting hit pretty hard. I'm gonna move out to the monthly. So Johnson and Johnson saw all-time highs here in April of 2022, and I've never seen them again. They've been in a downtrend now for almost 2 years. They are in a bear market for their company. And so they've been ranging in a downtrend as well. So as you can see here, this thing has been going down, ranging down, and we had a strong level of support here at 144. And I actually thought it was going to hold here, and it did not. The sellers are winning, and they, in fact, took it to lows that they haven't seen since November of 2020. And so that's not good, right? Um, that's not a good sign. Um, there's been some bad news about this company recently. On Wednesday, we have a strong bearish candle here. They paused the use of their heart device, and so that's never good. Um, there was some safety concerns on their heart device that they sell. Obviously, a heart device is a big money maker for a company. If you make a heart device, you know that stuff is expensive. And so if you're pulling that, that means that you spent money on them and now you can't make the money back on them because you're pulling them from the market. So that's just a loss. So that's, of course, not what investors were expecting. And so the stock reacted to it. And this stock's been getting hit now for 2 years, though. So that's not the only thing wrong with them. That's just the newest thing wrong with them. So yeah, I like Johnson and Johnson to the downside for now. I have a few different trend lines for these guys. I see them coming down to about 137, 138 from this 142 level. So that's some good money there. That would be a good like 4% move down to the downside, almost 5%. So yeah, that would be cool. So yeah, and as far as the chart goes, yeah, we already told you it broke below this 144 level and then came back above it. Again, buyers came in here because this is a buy zone regardless. Buy zone, buyers came in, they couldn't do much. Buy zone again, buyers tried again, took it higher than what they did before. Sellers came in and said, no, this is a wrap. So yeah, it took it way past what it was holding. And so yeah, I like this stock more to the downside now because of that. Simple as that. Simple as that. When we look on the weekly, we have an inverse hammer hit here. So I can see if maybe even we could get a pullback back to this 144 level. And then if I see some resistance on this 144 level that it pulls back to, I'm definitely jumping in the puts there with a tight stop, 2 week out option contract going heavy. So yeah, nothing against you, Johnson and Johnson. Just this is business, nothing personal. And last but not least, we have Carvana. So we did a calm like 4,000 on Carvana on Tuesday. Well, we got into it on Tuesday. We got out Wednesday. Quick trade we did on them. Nothing crazy. We got like, yeah, 20, 25% on that. Nothing crazy. I got more if I had gotten out on Tuesday. So that would have been just a less than 3 hour trade, really less than 2 hour trade on Tuesday. And I would have made more money. But stayed in for a little bit more money. The market pulled back. So we took over. It's all good. It came back down for us, as you can see, and we got out somewhere around here on Wednesday. And then it pulled back some more after we got out, so that's none of our business. But if we look at Carvana here, I already did my analysis as to why I think this is coming to the downside, and I think it's probably coming to the downside some more. I already said I think it could get down to 160. And even before 160, I think even 168 looks like a level that it wants to come back down to. As you can see, this is a previous level of support. So I wouldn't be surprised if it turned back around on this 168 level. But I do think it's going to come down there. And it's definitely coming back to this 176 level. So yeah, this is Carvana. As far as the weekly options and 2 week out options go, we're gonna have closer price targets because when it does hit these price targets that we're talking about, it may turn back around just because the market is so choppy right now. It doesn't really know what it wants to do, and Carvana might move with the market. So again, we don't want to be too greedy, too anxious. So we're gonna also have a 188 level here. So if I go into the hourly, you can see Carvana been consolidating a bit. And even in this consolidation, we made money because we know where to get in and where to get out at. We get in at the top, we get out at the bottom when we're in puts, right? When we're in calls, we get in at the bottom, we get out at the top. So I'll be looking at Carvana here. Definitely, if it breaks this level of 193, think it's definitely coming down to this 188 level. And if we, for some reason, the market decides to turn around, I think that rejecting this 212 level would be a good time to get into puts as well for Carvana. That's a very big move to the downside if we get that. Might not though. It might come back to maybe this 203 level, 203.50. Um, so we'll see what happens. We'll see what happens. We'll see what the pre-market looks like tomorrow morning. That's going to determine my entry as well. So I'll let you guys know exactly what I'm doing in the morning or throughout the day. I might not get into a trade as soon as the market opens. It might get in middle of the day. So we react to the market. We don't, think we know everything. So we're gonna make sure that our plan is we follow our plan and we don't go against the plan or go against the grain or get too excited. We're gonna do and we're gonna take what the market gives us. So that's it. This was a chart review, getting ready for Friday, January 10th. And so, yeah, let's get it. Let's make some money tomorrow. I'm Kenny, this is Code to Capital. Like this video, subscribe to the page, Code to Capital. Tell a friend to tell a friend. Follow the Instagram, code.to.capital. Join the Patreon, Code to Capital. Everything's free right now. All my posts. I go over chart reviews like this. I call out stock option trades and I teach software development on the low code platform OutSystems. So get into them, man. Let's go. We're just getting started.